Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Wednesday, August 6th, 2014. You're looking at a chart, a daily chart of the SPY, and today was interesting because we almost had the scenario I outlined last night. Of course, when you outline a scenario, it never happens, right? It's Murphy's Law. It never happens. However, I said last night you might get a big down open, and then you might get a reversal, and then maybe follow through for this afternoon into Thursday and Friday. And you know what? You got the let's take a look at the 10-minute chart. You got the down open. Okay, here you go, down open, and it could, anything could have happened. You got the down open. And then you had a reversal, okay, and then you shot higher, and you had some volume, and then what happened was the market just died. And that's a sign of a weak market. That's the sign of a market that needs to go lower before any kind of a material bounce, okay? And that's the sign of a trend change. We've had a trend change. We're in... they're not going to call it a bear market, but I'm here to tell you this is the beginning of the bear market. Okay, these are the signs. Remember from a month ago or 2, 3, 4 months ago, last year, the year before, remember when we would open down, okay, and then we would rally and then get higher all day long, and we finish up on a close. All of a sudden, at 3 o'clock in the afternoon, the market started getting stronger. And that's when the algorithms kicked in from the high-frequency traders, and they pushed the market always, the S&P, they always pushed it 4, 5, 6 points higher into the end of the day. Well, guess what? That didn't happen. They had every excuse today to keep going to push the market higher. Look at the 60-minute chart, which actually is a bullish chart. That was, the 10-minute was bearish. The 60-minute is bullish. But there certainly could be more downside tomorrow. Don't rule that out at all. You could have another week open and you can continue lower. Anything goes in these markets, but this is setting up for bearish. But if you fail, if you come below this low, game off and you'll go lower. But on a daily chart, here's what you have. Okay, let's just recap real quick and then we'll move on to gold because some exciting stuff. You almost came into this window of the gap here, okay? You didn't quite get there, and then you're going to fill this gap, all right? You're going to have a lot of support in here, in this area here, and then you're eventually going to come down to this double bottom from April. Now, let me draw you in what that looks like on a Fibonacci retracement. There we go. Okay, so you hovered around the 382 from last week, okay? Now you're headed towards the 50. Now, because the 382, you had a couple of sideways days here with the 382, I can't guarantee you that it's going to stop here at the 50. But it's either going to stop at the 50 or, if not, for certain here at the 618. This 188, 88, 87 level has a lot of support in here. This went sideways a long time, and the market's going to provide a lot of support in this area, 187, 88. However, after that, okay, the trap door opens up all the way to 181, double bottom, maybe 182. We'll see what happens, but that's going to be a meaningful bounce. And you'll have a meaningful bounce along the way in here somewhere. Just don't know where. It could happen tomorrow, or it might not happen for a week. You just don't know. We can just do what the market tells us to do. We never impose our will on the market, right? I always say that. We just have to let we don't draw the charts. The market draws the chart, okay? By virtue of it moving, the market draws the trend lines, it draws the charts, it draws the patterns. We just read them. That's all we're here to do is read it, okay? We're not here to draw it. We're just here to read it. So not much happened at the end of the day today in the Spider or the S&P or the Dow for that matter. However, weak market. When markets finish weak and they have every excuse to go up, they just want to go down. There's more downside to be had. So whether it's tomorrow or not will remains to be seen. But there's some European Union or central bank announcement in the morning, I believe. So we'll see how that impacts the markets. Europe is real weak. The DAX is weak. The DAX is down 10% from the high, much more than our markets here. Deutsche Bank, I've talked about before, real weak. It's just weakness all across Europe. You have Obviously, the Russia-Ukraine deal going on. So there's weakness in Europe. There's banking problems that you just haven't really discussed yet. They're out there and they'll come out. This is going to be another banking problem among other problems. But banks are going to be part of the problem. There's no doubt about it. Okay, so you know what? Let's jump over to gold. And gold had a big move today, had a big up day. So let's go to the 10-minute chart. And it's really pronounced, right? Gold jumps up at the open, and it just goes sideways in a pretty tight range all day. Okay, 125.5 up to 126. So a 50-cent range all day in GLD. And on the 60-minute chart, it pretty much looks the same, which means, you know, this wants to go higher right now, but this isn't the move. I don't believe we're not ready for the bigger move yet, or the beginning of the bigger move, because my time and price haven't converged yet. And until that happens, I'm not ready to buy in. However, I know some members are long gold. I know some members are long GDX. Let's take a look at GDX. I know some members are long GDX from when the inverse head and shoulders triggered, right? Let's go over to the, not the monthly, let's go over to the weekly chart. And as long as we hover above this area, this is where the line would be for the inverse head and shoulder, coming down here. As long as we remain above this area, okay, that's fine. And you can just sit around and wait for this thing to shoot higher. But there's $10 in it if there's $1. So we're gonna ride the GDX trade. I'm just not ready in time and price, but I know members have it, and that's fine. We're gonna issue some gold mining stocks as well as GDX when time and price converge. Okay, let's jump over to you know what? Let's go back to GLD for a second and talk about why. Why was gold higher? You'll hear everything under the sun. Frankly, I don't even know what they were saying today. It doesn't matter what they were saying. What matters is we let the price action and the charts tell us what to do. They'll talk about the fear trade, and that's the reason gold was up, whether it was today or another day. It'll be because of the fear trade, or it'll be because of inflation. It's that simple. But either way, the charts tell us what to do. We don't impose our will, right? I keep saying it over and over again, but that it's worth saying over and over again. But what's important is to recognize I don't really care whether gold goes up or down, or the market goes up or down, or a stock goes up or down. I just want to be able to read it correctly. So I'm not a bull, I'm not a bear. This is a business. I'm looking at the price action in the charts of whatever equity or commodity I'm looking at, and my objective is to see if I can identify a pattern that will take me to somewhere that I can make a profit. And if I see it and it's got a high enough probability, you know, if I think it has an 80% probability or more, then I'm going to issue it to the members. And that's the way we play it. So I'm not bull, not bearish. Speaking of trades, we had a short trade on FedEx. I put out another video earlier, but the short trade on FedEx was a 5% on the first half, which we took off today, and we're going to let the rest ride. This is a member trade that was issued on the 23rd, and 5% we took off on the first half, and we'll see how low FedEx can get, and we'll trail a stop. But right now it's a guaranteed winner because we have a break-even or better stop on the second half. And another trade, we have SMH, which was issued a few dollars ago as a short trade. And that one missed our first target by, I think, 8 cents today. So we'll just give it another day or whatever it takes, and we'll take the first half off, let the rest ride. So these are working out. The short trades are working out along with the cycle change or the cycle turn. And it's going as planned. So we just keep reading the market, let it tell us what to do, and we're going to play it day by day by day, and we're going to make money day after day after day, and that's the objective. So right now we can take a look at oil, and oil's sick. Now the oil complex was up today, meaning the stocks, but oil's sick. And I knew it was sick a few weeks ago. And you remember when I issued a trade and then we backed out of the trade because it didn't look right, it didn't feel right. My analysis told me that it was going higher, but something just stunk. It didn't feel right, and I was right. It just didn't feel right, and it melted away. And for some reason, oil's not acting right. With all the stuff going on around the world, something stinks with oil. And the only thing I could think of is, besides being a deflationary force pulling it down, the only thing I could think of is when you start to hear the economy's contracting and we're not growing at 3% and GDP is 4 or 3 or whatever it is, when all those things become we're not growing and it's actually worse than we thought, It will be, we're going to spend less money, we're going to have less production of oil because we're going to have less manufacturing, because we're going to buy less stuff, and all that stuff. So that could be the reason that oil's sniffing out lower prices. It's not really the reason, it's just the excuse. But the point is that it just didn't look healthy, and it doesn't look healthy. And in this environment, oil should be going higher with everything that's going on, and it's not. So something else is at work. And so that's why we stayed away from it. There's a price to buy it at, by the way, and I think I talked about it last night. And the price is not here yet. It's at least at this pivot low at 34.97. Okay, so 34.97 for me is a better level, and we're going to see if that one works out. So I've got my eye on it, and I'd like to pick it up at that level for a bounce, but right now I don't catch a falling knife. Time and price have no business telling me there's a trade here, and that's it. It's actually starting to make, sideways bearish consolidation for another leg down, maybe to the 35 level. So we'll see how that plays out. Anyway, I think that's a wrap for tonight. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in, folks.